Hey, what's going on, everybody? Welcome to another week of the Rapid Review. Look, another week of a lot of headlines, but let's talk about what really matters to us traders, dive into everything that happened on in the overall market, and get ready to trade for next week. All right, so starting off looking at the market direction, still an uptrend, power trend still healthily intact. And we'll look at that as we get to the charts later on. But overall, everything is uptrending and green. The distribution days. So we're currently at 3 distribution days in the S&P, 2 distribution days on the NASDAQ. Looking at our distribution day tracker, which I am now going to be following, now going to be sharing every single day during the week, so you can kind of keep track of this throughout the week. Right now, we just have 1 distribution day that was added on Monday on each index. So you can see that here, the 7th, we added a distribution day. Other than that, the 2 distribution days from June 9th and June 11th will be dropping off next week. If it doesn't happen, which we thought might have happened this week due to price action, then it will happen due to time. Once you get 25 trading days above that distribution day, you then drop off those distribution days. So Friday, Friday, this 6/11 will expire, and then this will expire on Wednesday. That would leave us with 1 on the S&P, 2 on the NASDAQ, which is low distribution, not really concerns. But again, we could always acquire some more distribution next week. So as of right now, things don't look too bad at all in terms of distribution. Looking at the current state of the market, we have this week S&P down 0.31%, NASDAQ down 0.08%, and the Dow down 1.02% for the week. And for the year, everything's still in the green. S&P up 6.43%, NASDAQ up 6.66%, and Dow, the laggard for the year, up 4.3%. Moving averages. So everything kind of coinciding with what we just said in terms of the year performance. You know, the Dow lagging as it's sitting below its 10-day simple moving average. Moving averages are a little, out of whack as the 200 is above the 50. But with the S&P and the NASDAQ, everything's healthy. We're above the 10, the 21, the 50, and the 200. Each of those averages are stacked in the right order, signifying that we have been in a very good sustained uptrend. That is one of the things that I do always mention when it comes to these moving averages. Aside from areas that could provide resistance or areas that could provide support, being above that moving average doesn't necessarily mean that we're going to remain above that moving average. It is a lagging indicator in my eyes, but it is definitely an area technically where you'd see support and resistance. So that's partly why I like keeping track of it. And 21 is very, very good to just also signify when we break over that, that could be an area that could see us roll over further. But being green above everything doesn't necessarily mean that we're going to continue that way is the gist of what I'm saying. So let's jump over, take a look at the charts. We'll start off as we always do. We'll look at the NASDAQ, and we'll do that on daily. Zoom in for you here. So you can see we started out that week with that distribution day. We were down on volume. Looked as if we were possibly getting a pullback. Maybe something along the lines of how we saw back here. But yet again, we pulled back. We barely even got within the 10-day simple moving average. And then we climbed higher all the way up till Thursday. And then on Friday, we just kind of pulled back. Had that kind of pretty close to an inside day. Should double check on that right now. Yeah, inside day on Friday, and held right above that 10-day simple moving average. So overall, if you look at how this market's been acting, it has been a long time since we were really below that 21 day, really going all the way back to here. Actually, no, because we didn't even close. Last time we were closed below the 21 is going all the way back until April 22nd. So really interesting to see how this uptrend has just kind of really just kept going up and up. The pullbacks, if any, have been very light, and sometimes that's just what the market gives you. We'll look at the weekly, so you can see that there. You can see just slightly down for the week, and really kind of a tighter action week compared to some of these other weeks through here. Volume was a little higher on the downside, but nothing too concerning, because last week is going to be light volume with the holiday. So you're really more comparing to some of these other weeks. So actually, I'll retract that statement. It's not a really that high of a volume week, especially when you compare it to some of these other high volume weeks. All right, looking at the key areas to look for on the upside, it's really at this point, it's just going to be continuing to see, can we continue to make all-time highs? On the downside, staying above the December 16th high right here is definitely important. Psychologically, we broke through that prior high. So now can we remain above that level? And so far we have been, which has been really healthy. Further through that, though, we're really looking at that 21-day simple exponential moving average that I have up here. You can also be looking down to the 623 low right here, which I really should have marked up on this chart. But those are the kind of areas I look for. You do look at the 10-day simple moving average. Honestly, it doesn't really tell me much because we can bounce through and above that many times. It's such a short-term moving average. For me, it's not too much of a significance in terms of how I trade and my trend. But yeah, these are the key levels that we're keeping an eye on. If we're looking at the S&P, I'll be honest, nothing really much different to say. We had the distribution down Monday, the same thing. We climbed higher for 3 days, pulled back. This pulled into the 10-day simple moving average. The key levels are pretty much the same, except we're looking at the 219 high of 2025, not 2024. Just so everybody knows that. That was a typo right there. But yeah, this stay right here. 219, 2025. There's a typo right there. So staying above that, staying above the 21, which now is coinciding with that, and also staying above this prior low right here of June 23rd. So levels are a little bit different, but the action's pretty much the same. And there you have the weekly on that as well. All right, now let's jump over and let's take a look at the themes within Deepvue. For those of you who don't know, I am a Deepvue partner. I've been using their tool now for about 8 months. Prior to this, I used the same tool for about 7 years, but wasn't very happy. So I was constantly looking for a new tool for many years. And then when I did find Deepvue, it was honestly exactly what I was looking for. So this is where I do all my stock screening, all my watch list, and make my decisions on what stocks I'm going to be trading. If you did not know, I have posted this. They are doing a free trial for a month. All you have to do is go on the link that I'll post it. I posted it a couple days ago. So if you go through my Twitter feed, you can see it. I'll also have it in the description of this on YouTube. It gets you a free month. And during this free month trial, you can basically try it out. No credit card, nothing like that. And see if it's a tool that works for you. I also do the onboarding, one-on-one onboarding sessions and monthly onboarding calls too. So you can check those out to help people get kind of comfortable with the tool. And if for some reason you just want to reach out to me and ask for specific help, just feel free to reach out to me, Twitter, in the Discord channel, in the comment section on YouTube, whatever works for you, and I'll be happy to help you out and get you up to speed with Deepvue. But looking at the industry themes right now, the big thing I think to highlight here is it's very clear that we're seeing this Bitcoin blockchain kind of strength, especially in the last month. That's super clear. A lot of the news headlines talking about different types of Bitcoin or different types of cryptocurrencies, the apps and things that kind of tie into that all performing well. We talked about this last week, solar. Solar hasn't really had that full confirmed uptrend. It's really more of a bounce off of bottom. So for my trading style, I want to see these stocks actually sustain an uptrend a little bit more and now formulate a base. But semiconductors, semiconductors are definitely another area to keep an eye on, especially with the whole AI news. It's almost like that whole DeepSeek day just kind of fell in the past where all these things got annihilated, and now everything's kind of come back, broken out of bases, and a lot of these are looking really, really good. And it's a pretty wide base move with these semiconductors, I would say, where there's a lot of different semiconductors, not just NVIDIA doing well. For the week, other than that, nothing much to say here. A little bit of possible rotation we're seeing within this week. I think a lot of people are experiencing a little bit of chop in some of their positions. No surprise there, especially with how strong this uptrend is. At some point, there's got to be some sort of turbulence brought into the market, whether it's some rotation, whether it's an actual pullback or something along those lines. But this is what we're looking at right now in terms of the themes of the market. All right, so wrong button. So, in terms of the exposure levels, I always love to talk about exposure levels. How much invested should you be in the market? Look, there's a lot of positive market action, and I think nothing has really changed over the last couple of weeks. If you are 100% invested, very, very good, as long as you're in the right positions. If you're on margin and it suits your trading style, it suits your strategy, and your trades are working for you, I don't see anything wrong with that as well. The trend is up, the power trend is on. We're very, very resilient to a lot of news that's out in the market. And if things are working for you, great. Now, with that being said, don't be on margin if you're getting chopped up. Don't be on margin if you're struggling to gain cushion in positions. If you are even entertaining margin, it should be something that you have, good knowledge in, you're fairly comfortable with. To be honest, a lot of top traders do not use margin either, so it's not a requirement to make money. So just understand that. But we talked about this last week. I'll just repeat it again. This has not been an easy dollar market for everybody. It has been moments where there is chop, there is failed breakouts, there is a lot of patterns that you are seeing just kind of zigzagging sideways in like a tight, 10, 15%. Looking like they're breaking out, then failing down, looking like they're breaking out, and just getting some people really, truly, honestly exhausted. The only thing that I have noticed that has helped my trading is I've tried to limit my buys on days where the market was bouncing off a pullback. The stocks that I have bought as the market pulled back for a couple days or a day or two, pulled into the 21 or anything like that, and then I had a powerful, strong day off of that. The stocks that I bought there normally got a chance to give a little bit of run, a little bit of cushion to help me stay into some of these stocks. With that being said, even after that really powerful move, some of these stocks are just chopping and inching upwards. Nothing surprising, nothing like 2020 where you were buying stocks and you were up 50% in a couple of weeks. That felt like the beginning of this rally, but I think as of recently, things have changed a little bit, and it's gotten a little more choppy and a little bit of a harder penny market. So, final thoughts though for all of this is, look, there's lots of positive market action. You have to stay disciplined. You don't want to on the positive side, you don't want to let your success cause you to break rules and cause you to create what could be a next big drawdown for yourself. They often say that sometimes following your biggest winning periods follows your worst losers. So don't let that happen. Stay focused and keep your emotions in check. And for those who maybe feel like they're lagging behind the market or lagging behind their normal performance, do not chase. It is not going to help you if you're just really, really hunting down, trying to chase and make money. Stick to your rules, be disciplined in your entries, and eventually the strategy will present opportunities to you that will work. Big reason why I do this every single week is I think there's a huge importance in terms of the amount of risk and the entries that I'm making when it comes to the overall market. Downtrends, uptrends, choppy markets, explosive markets. I've found in my trading that market timing is extremely, extremely helpful for giving me the opportunity to get in stocks and out of stocks at the right times to keep my equity curve trending upwards. So that's why I like to share this stuff. Hopefully it's informative for other people. Other than that, though, that is pretty much all we have. If you're watching on X, there's the YouTube channel. If you're watching on X, there's the if you're watching on X, there's the YouTube channel. If you're watching on YouTube, there's the X channel. So you could watch on either kind of platform. You can reach out to me either way. I'm more active on X. We got a link in the description for the Discord channel, and link in my profile on X for the Discord channel. Very, 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 very close to 1,000. Excuse me, 1,000 growth stock traders. So yeah, check that out. If you haven't joined, let me know what you think. Join it, and let's see if we can get to 1,000 basically members. So appreciate that. And then email if anybody wants to reach out to me via email. And again, don't forget Deepvue doing a 1-month free trial, no credit card required. All you do is you put in your email, you get access, and you can kind of mess around with it. So check that out. I have a link in the YouTube description, and on X I've posted a couple times my link, but just feel free to shoot me a message and I'll send you my link as well. All right, that's all we got. Other than that,